Hey everybody, it's Mr. Wagstaff. Cool stuff to talk about today. So we're going to talk about something that is going to be a very important part of your life forever, as long as you live in America and you make money. Today we're going to talk about filing taxes and how you do that. Let's go ahead and get started. So we've been talking a lot about taxes, the state taxes, federal taxes, local taxes. We need to specifically talk about how you file your taxes. Some taxes like sales tax, excise tax, hotel tax, you pay those when you're buying something. But things like income tax. Income tax is very, very important to both the state and the federal government, and you have to pay it every year. Now, while there's been deductions the whole time, you're like, are we having to pay more taxes? Not necessarily. This is called tax season. Basically, between the beginning of January and April 15th is tax season. If you have a normal salary job, typical job, and that's not necessarily normal, if you have a typical salary job or a job in which you get paid by the hour, you probably already have money taken out of your paychecks, as we've been talking about most of this unit. What you have to do during tax season is you have to basically file with the government, turn in some paperwork to make sure the same amount of money they took out is the same amount of money that you owe. So usually, most of the time, you've already paid your taxes. So there's not actual money you have to pay. However, a lot of times, you actually paid too much because the government knows it's easier to give you money back than ask you for more money. So you need to file your taxes during tax season, and any extra money that you may have paid that you didn't need to, the government gives you back. But you can only do that if you file your taxes. It is also legally required that you have to pay your taxes. If you don't pay your taxes and you lie on your taxes or you do this other stuff, you can go to prison for that. This isn't like an optional thing to do. You have to submit forms to the government so they can check with the amount of taxes you've paid and the amount of taxes that you owe. And it's not necessarily simple. That's why we're going to spend all day today talking about it. So, how to do your taxes. It's tax season. So, the most important form that you need to fill out, assuming you have one job, you've worked there the whole previous year, you have your W-2, we'll talk about what that is in a second. The form that you have to fill out for your individual income tax return is a form called the 1040. Now, there's no way of me making this simple or fun. All the forms are known by a completely random number. There's nothing I can do about that. However, while it seems difficult to memorize it, these are the same numbers they will use most likely for your entire life. So these are things that you need to commit to memory because you're going to use these every single year of your entire life. This isn't, a squared plus b squared equals c squared in math that you're probably never going to use. Unless you're a carpenter or something and you need to find, the length of the hypotenuse. However, these numbers for these forms are very, very important. So let me show you real quick how to find these forms. And before I jump and show you that, there's multiple ways of being able to do this. I want to show you just the default, how you can go online and find these forms like 1040 in which you turn this into the government, explaining to them how much money you have made and how much taxes have been taken out. And so they can verify with their records. So let me just show you how to find these forms for both the federal and the state level. So here's how to find your tax forms if you want to go and do it manually. Just go to Google and you can literally type in where to get my tax forms. It'll pop up here. You can go here. This is a promotional thing, but you want to go to the IRS one. All right. So the IRS, you click on that website, it'll bring you here. You will go to forms and instructions and you can click on any of these here and it will bring up, it'll bring up your form that you can print out. On the home page there, let me back out, forms and instructions. Just on the home page here, if you scroll down, here's where most of the most popular forms are: your 1040, your W4, your W9, W2. However, your W2 that we'll talk about, your W2 is actually going to come from your employer, so this isn't something that you'll fill out. But if you wanted to do them yourself, this is how you would access these forms to do them by hand, which is the least common way of doing your taxes. Now, to do your North Carolina taxes, or whichever state that you're in, you will also have to go to your North Carolina equivalent of the IRS. In North Carolina, it's the Department of Revenue. Go to their website up here where it says taxes forms. North Carolina is not as straightforward as the federal government is. You would have to come down and say individual income tax, and then you're ready to file your taxes, and then there is quite a few things you can click on here. You can download forms and instructions. You want to click on the correct year. This is being recorded in 2023, so that's obviously the most current year, but you can get forms from the past years if for any reason you wanted that. And then you would come down here and you would get the form that you would like. You can do this online. Again, we're going to talk about this later on in this lesson, but it is actually easier to use a different company or a person to do this, because I'm not familiar with really anybody that actually does their own taxes without having at least a program or something that helps them with it that we'll talk about here in a minute. All right, now don't panic, okay? Because while just showing you how to go find those forms online seems daunting, there are simpler ways of doing it, though it will cost you some money. And we'll get there in a second. So the question here is, which form is typically used by the individual taxpayers to report their taxable income and calculate their federal income tax liability? It's the 1040 form. Explain why this is like the most common form used during tax season. So pause me, answer that completely. We're moving on. All right, so here's some more common forms. The 1040, almost everybody has to pay income tax. If you had income, you had to pay income tax. So here are some other forms that are really, really important for you to understand. So these also, not only do they have a number associated with them that are completely random, like 429. This has a W4, W2, and a W9. I can't make, I wish I could make it easier for you, but this is just straight memorization. So let's walk through what these three forms are and why they're so important during tax season. Let's start out and say you got hired. All right, you got hired last year. Hooray, you got a job. All right, and you had a salary. So as soon as you get hired and they're like, high five, you're hired, they're going to give you a document which is called the W4. All right, before you ever start working, this is the document that you get. If you've ever had a part-time job or have a job and they hand this to you and you're like, what is this? All right. This is important for the businesses to know how much money to withhold from your check, so that you don't owe a bunch of money at the end of the year. The important thing here is, if you're single, you're not married, you don't have any kids, you don't want to put any dependents on there. You're like you have zero dependents, because for every dependent that you put on there, that's basically saying this is how many kids I have to support. They take less money out of your check. And you're like, awesome. Not awesome for you, because at the end of the year when you file, the government knows you don't have any kids, and all that money that they weren't taking out, they're going to want it back then. And then you would have to owe money at that point. So here you want to put that you have zero dependents unless you have actual like kids that you're supporting. You are not a dependent of yourself. That they kind of already assume that. So it's usually zero unless you know otherwise. So that is a W4. Now keep in mind, if you're like, well, what if I just don't do it? All of these documents, the business has a copy, you'll have a copy, and the government gets a copy. So taxes are a little frustrating because the government, it feels a lot of times like they're like, all right, file your taxes. And you're like, all right, how much do I owe? And the government's like, that's for you to tell us. And they're like, all right, so I can just make anything up. They're like, nope, there's a right answer. And you're like, well, what if I get it wrong? And they're like, you go to prison, which is an exaggeration. People make mistakes. But if you make mistakes, you're going to have to correct it. So this is not something you can ignore or not deal with. W-4 especially, because you would have to fill out the W-4 before a business pays you, because a business has to keep track of how much money they're paying you. They have a whole separate form for that we're getting ready to talk about. So typically you either fill out a W-4 or you fill out a thing called a W-9. Here's the difference in a W-4 and a W-9. A W-4, you're telling your business, hey, I'm just a single person living by myself, so I don't have kids that I have to pay for, so don't take deductions from me. Well, the whole reason for a W-4 is they know how much taxes they take out. Say you're an independent contractor, like you're a plumber, and you bump around to a whole bunch of different businesses, all right? And you work a whole bunch, and each of them have a $2,000 job for you, all right? And you're bumping around to different businesses. Since you're not an employee there, and since you're like a contract employee, and your taxes are taken out based on how much you make a year. If you're only like hopping around from business to business to business, they don't really know how much money that you're making every year. So what you would fill out is a W-9 with every individual company. And basically all it does is gives them your social security number. If you fill out a W-9, it's basically that business saying, acknowledging they are paying you. They take out no taxes when they pay you. No taxes get taken out. However, you are responsible for paying all the taxes for the whole year during tax season. And since you filled out a W-9, the government knows exactly how much they paid you, and they're expecting you to pay your taxes. So a W-9 is if you're like working for a whole bunch of individual companies and they don't take any taxes out. So that's what a W-9 is. So the super important one that you have to have for taxes. Actually, they're all super important because none of them exist without the other one. But the W-2, this is wildly important, all right? Again, they're all important, but so if you work at a job, it is their responsibility to get this to you in January, all right? Say you worked at McDonald's, Wendy's, Taco Bell, all three of those the previous year, and you quit every one of them, you're going to get 3 W-2s because when you started every one of those jobs, you had to fill out a W-4. They're required by law. Even if you quit it, you're on awful terms, you don't ever want to go back there. It is their requirement to get this W-2 to you. They either mail it to you or they'll call you and have you come pick it up. What the W-2 says is, here's how much money you made when you worked for us. Here's how much taxes we had taken out. All right. When you go to fill out your tax forms, you have to have this. This is the information. Say you have 3 different W-2s because you worked at 3 different companies. You add all that up. All of that goes on that 1040. That 1040 form. All right. And that is what you turn in. This is the official document that tells you how much taxes had been taken out from your paycheck the entire year. All right. So W-4, basically when you get hired at a place, you tell them how much or basically you tell them your situation, and that way they know how much taxes to take out. The W-2 is at the end of the year, or I guess the start of the year. In January, you'll get it from the previous year, in which it tells you all the taxes that had been taken out of your check so that you can then file your 1040. So the question here is, explain the difference between the W-2 and the W-4 tax form. So pause me, answer that completely. We're moving on. All right, business taxes. It's important to point this out in case you end up being super rich and being the board member of a CEO of a corporation, or more likely a business owner and you have employees. If you're a big corporation, this is like Amazon. I don't know why I picked like the biggest possible corporation, but if you're a corporation, you have to fill out something called Form 1120. All right, so most of y'all aren't ever going to have to fill this out, but if a corporation does. So a corporation isn't actually owned by an individual person necessarily, or they're not liable. It gets more complicated than difference in corporations and individual entities and run by a board and who's liable for whatever. Anywho, like Amazon. they have to turn in a Form 1120 every year. All right. They obviously are going to hire accountants to go through and fill out, and basically the Form 1120 tells the government how much corporate money they made that year, so the government knows how much to tax them. All right. So Form 1120, this is for corporations, is probably the least likely one that you're ever going to get, that you would ever see. I would say the vast majority of y'all will never in your life deal with a Form 1120. Form 941, I've never had to deal with one of these because I'm not a business owner, meaning I have employees. However, if any of y'all become business owners and you have employees, you will have to fill out a 941. What this does, and this is, making sure everybody's on the same page, this is, you actually have to do this quarterly. You have to do this 4 times a year, not just during tax season. If you are, have employees, you are taking taxes out from them because the government requires you to do that. Well, you're going to be submitting those taxes quarterly to the government. That way you don't just hold on to it all year and then they could disappear and then those people didn't pay their taxes and you go to prison, and it's a whole big thing. So if you're a business owner and you're taking taxes out from people like you're required to do, you have to every 3 months fill out this form, which is a 941, which is letting the government know how much you are paying people and how much taxes you are taking out, and that way you can go ahead and submit it to the government. So 941, if you're a business owner, this is going to be something that you will have to deal with, not just during tax season, but throughout the entire year, if you are paying people salaries. So the question here is, what is the difference between a tax form 1120 and 941? So just clarify what those two are and we'll move on. So pause me. All right. Miscellaneous income. This seems like, I won't ever have to deal with that. You would be surprised. The 1099 tax form, again, there's just numbers. You have to memorize them. This is what they're called. They're not called anything else. They're just known by the numbers. Thanks, IRS, for making it simple. And then at the state level, they all have different numbers for their different forms. Super fun. The 1099 is a miscellaneous income. You're like, all right, what does that mean? Well, let me give you an example. Say that you have a business where you buy old sneakers, you clean them up, and then you sell them on eBay, all right? And you make like decent amount of money out of that. That you turn around and you made $25,000, and I'll use that as an example here, but you could have made $1,500. We'll go with $1,500, and I'll explain to you why I'm using that number. $1,500 throughout the whole year, all right? You sold 10 pairs of shoes at $150 profit. You found these old Jordans and you got them for $70. You cleaned them up. You sold them for $220. You did that 10 times. You made $1,500 profit. Now, you will when you buy and sell stuff, you're using PayPal or Venmo or a Cash App or something like that. That money that you are making from your side hustle, that is also going to be taxed. That is, since it's not like a salary job and you're not having taxes taken out of that, you will get a 1099 from that. Now, the 1099, who's giving that to you? If you did all your transactions through PayPal, PayPal gives you that 1099. So and keep in mind, if a company gives you a form with data on it, that is also going to the government. So the government has it as well. So you can't just be like, oh, don't have to pay taxes on it. Another very common example of a 1099 is if you own a house that you rent out, so you get rental income because you own a house that people rent from you. That's not your job, but that is miscellaneous income, and you get a 1099 with all the amount of money that you made from renting that house if you use like a property management company. If you don't do that, you have to fill out these 1099s yourself. So 1099, this form basically, it's anything not associated with your job of how much extra income that you had come in. So it'll look something like this, and it's very straightforward how much money that you had coming in. So I want to point out here about the money. So, because this in this 2023, and whenever you're watching this, it could have changed. So keep up with this because this is currently what is happening, and people feel strongly about it on each side with like PayPal, Cash App, Venmo. That it has always been the only way that PayPal or Venmo, the only way that they give you a 1099 is if you had more than $20,000 in transactions. So a lot of people were only having like $1,500 of transactions, not getting a 1099 and being like, I'm just not going to file. Well, if you get caught with that, which is called being audited, and they catch you, it is really, really bad. It's called tax evasion. It's what Al Capone went to prison for. So you got to be honest here, because the government is pretty smart. Anywho, so the government is aware that some people are trying to not file the taxes since they're not getting a 1099. So as of 2023, the government is now saying any amount of money that that gets transacted through Venmo, PayPal, Cash App, anything like that, the threshold is $600 for the whole year as opposed to $20,000. So it causes some conflict. Like, well, what if you're just paying your family member back for other stuff and you have over $600? Makes it more complicated. They'll probably come up with another form with another number for it. But just keep in mind that if you're using any type of these apps, that once you hit that $600 limit of transactions throughout the whole year, you will get a 1099 in which you have to file your taxes as income, since none of that had been taxed. So who is required to file a 1099 tax form? That's literally anybody that has extra income of any amount. And then why is this different than the W-2? The W-2 is directly associated with like your job in which taxes are being withheld. Your 1099, none of those taxes had been withheld. That's just like your side hustles, anything like that. You still have to pay taxes on any additional profit or income that you made from any side hustles that you have. All right, so pause me, answer that completely. We're moving on. All right, so now that you're good and like, what? Everybody in America has to do this every year. It's not fun. People get grumpy about it. You're like, how am I ever? I thought when I got out of school I wasn't going to have to do homework. Nah, you have to do homework. However, and at school, if you paid somebody to do your homework, then you would get in trouble. When it's tax season, that is encouraged. They strongly would rather have a tax professional do it for you, because if you do it yourself and you just go download all the documents from the IRS website and try to do it by hand and then mail it in through the mail, so many things can go wrong and you're responsible for it. And it causes more headache for the IRS, who has to go through like everybody's taxes. They'd rather have them nice and neat, organized by tax professionals. So let's walk through your timeline of what's actually going to happen when it's time to file taxes. Number one, it's January, and it's time, and again, you have until April. I'm an early bird. I like to do mine as soon as I get all my forms in, but you can wait till April if you want to. However, if you hit like any roadblocks or anything like that in April, it makes it more difficult. Start early, but gather all your documents. Your W-2 is most important. Get your W-2 if you have any 1099s. Anything that you have been sent by anybody that you work for, any amount of money. Keep records of anything that can be a tax deduction, which is a little outside the scope of this course. But gather all your income documents, all right? Then you have to start filling out the forms. So you can print them off the IRS website. And you can actually go online. I think the IRS has stuff online. They're completely free, and you can go through and do it. However, there's a lot of math, and they'll start asking you questions. And even though the IRS thinks these are really simple questions, you're like, what does that mean? Do I depend on myself? Am I my own dependent? Taxes are complicated. So what is probably one of the best options here, all right, and I'll give you two options, probably the two most common ones. Let me say it. Instead of best, where 90+% of the people, this is very rare for somebody to actually sit down and handwrite their own taxes anymore, all right? So what do? Well, you want to go find a tax preparation accountant. Somebody who will do it, you just take them all your paperwork and they do it for you. Well, how in the world are you going to find one of them? You may have seen these guys like, oh, look at that person standing out there flipping that sign around. That's weird. You'll start seeing these people in early spring because if you're a tax accountant, this is where you make most of your money every year is during tax time for doing people's taxes. So they're not hard to find. A quick Google in your area, there's tons of tax accountants that you just take them all your documents and they do it all for you and make sure you don't go to jail and that you're all on the up and up. And they'll file it, you get a refund, it comes directly to you. So how do these people make money? Well, you have to pay them. And you're like, oh, well, I paid all these taxes, now I have to pay a tax preparation accountant. So it's not really that bad because most people get a refund, which means that they paid a little extra in taxes, so they get it back. A lot of times, all these places, they're saying, all right, it's usually about $200. I think the average here that I found was $220 if you do not itemize your deductions, which y'all are going to itemize your deductions. Unless it's over $25,000 of deductions, it's the standard deduction. We're just going to simplify it here without going down that rabbit hole. You use your standard deduction, I would assume. If you don't use your standard deduction, you know why you're not using your standard deduction, and it's not pertinent here to teach you about it. But $220 is the average, is what it costs for somebody else to do your taxes. Say you're getting $800 back, all right? When you do your taxes, what would happen is you would get $800? You would get $580 back because they would take the $220 out of that refund, and then you have $580, and you didn't have to do any homework. You just have to take them your W-2, your 1099s, whatever you have. You give it to them, they do it, you're done for the year. All right. Now, if you like to be super hands-on, but you don't want to print out everything, you can also do it online. Even if you went to the IRS website to do it online, they really do not want you printing things out and mailing them in because trying to read handwriting, things can get lost in the mail. That they really encourage you not to do that. So almost everything is done online. Even the tax professionals are going to do it online. So you could just go do it on the IRS website, but it's very difficult. One of the most common way people do their taxes, if they're not taking it to a tax preparation place, is they use online programs. Now, these, if it's very simple, you just have a W-2, you just have to file that and be done with it. That is the cheaper way of doing it, is going to be online. If you have a 1099, side businesses and stuff, using these online platforms will cost about as much as having another person go do it, because the more advanced your income taxes are, the more they can upgrade. But they always say, I think Free Tax USA and TurboTax, these are the two most common online programs. They always say, hey, it's free to file your federal, because they know everybody has a federal one. You have your W-2. However, you also have to file your state taxes, all right? And your W-2 will have both your federal taxes and your state tax information on it. So once you go through TurboTax or you go through Free Tax USA and you submit your federal taxes, it's like, hey, would you like to go ahead and submit your state taxes for you as well? That'll be $50. And that's how they get you. Because nobody's going to go do it by hand like a fine. So it's free. It is free for the federal. But then when you have to submit your state, they usually charge you like $50 for it. So TurboTax and Free Tax USA, so you can file your taxes. If it's super simple and it's straightforward, you can just use one of these right here, and it's the same thing. That a lot of times that gets deducted from your refund, and it goes directly into your bank account, and everything works fine. So in order to file, after you do all your taxes, whether you use TurboTax, you whatever, they really do not want you to mail it anymore. You still can, but the IRS does not like that because, again, handwriting, things can get lost. The preferred way of submitting your taxes now, almost exclusively, is do them online. It makes it so much easier for the IRS. If you just file your taxes online, and it's easier for you, it's easier for them, nothing gets lost in the mail. So filing taxes online present day is by far the most effective way of submitting taxes because of all the things that can go wrong. So that's what the question is. What is the most effective way to submit tax forms in present day and why? So answer that completely. And that's the end of our unit here on taxation.